break. That's my Chris walking. Anyway, how you doing, guys? We got to talk. We really have to talk. So I just watched a YouTube video. I follow a lot of YouTube. I love YouTube. I love social media. I love content. If you do it the right way, you get a lot of great information. I got some great information, but unfortunately, it's great information to the downside. So I follow a multifamily expert here in South Florida, in the Florida area. His name is Bo Beery. And he had a gentleman by the name of Brian Miller on his show. Brian is one of the big guys over at USI Insurance, which is the largest insurance brokerage in the United States. And he had a very, very meaningful conversation. I just want to fill you in on some of the details because if you haven't heard, insurance, especially here in Florida, we're going to see some really drastic changes coming up. So just want to prepare everybody. I mean, we're looking, one of the things he said was we're looking at an increase of at least 20%. And these are homes that have everything in place. So all those people that moved here and got new construction, or everybody who lives in a house that's up to code, and you know the roofing and everything is in place, you're at least looking at a 20% increase. And some people are going to be looking at as high as a 70% increase in their homeowners insurance. And we'll get into some of the details, but that's the main gist of it right now. So, you don't think about all of the events that have happened recently that have put a lot of pressure on the insurance agencies. The deep freeze in Texas, everybody remembers the deep freeze in Texas. Well, that was a $30 to $40 billion event for insurance carriers. $30 to $40 billion, that deep freeze in Texas. So when it comes to property claims, Florida is the number one state in the country for property claims. Number 2 is California, and number 3 is Texas. Something we don't think about from Ian rolling through, and that's kind of why everything's going haywire right now. But Charlotte, North Carolina, where all their homes are framed, and a lot of the multifamilies there are framed, they got absolutely devastated by Ian. We keep hearing about the west coast of Florida, and prayers out to everybody there, and as they still keep digging out from there. But Charlotte, North Carolina also got devastated, and these are all insurance claims. So some of the things we're going to expect going forward, there's going to be code changes. Framed houses in the state of Florida, they already are pretty much a thing of the past, but you're going to see that start to happen throughout Florida, and also in places like North Carolina, Charlotte. There's going to be improved construction codes. Like I said, frame is going to become obsolete, basically. Any of these framing is going to become obsolete. One of the really interesting things I thought I heard as well was basically Florida now, the whole state is considered coastal. So even Gainesville, Florida, is considered coastal in the eyes of insurance carriers. Most of Florida, I just mentioned that. So what's going to happen is, things are going to become more expensive. It's going to be more expensive to build. It's going to be more expensive to get insured. And there's only 2 things basically that can bring costs down, and that's lower claims and lower costs to replace your house. So what they're probably going to start doing is asking people to pay for, on top of your insurance, is an annual appraisal. And when I say appraisal, we're not talking about the home value, we're talking about the replacement value. And the cost of construction in the past 5 years has gone from an average of $110 a square foot to $180 a square foot. So if you got your insurance and the cost to appraise your home was $110 a square foot, you have a $2,000 square foot house, that's one number. And then 3 years later, you find out that the cost to build has gone up to $180 a square foot. Well, now your premiums are going to go up to reflect the cost of replacement. And that's just the way we're going to, kind of see it going right now. There are still framed multifamily homes out there. And I learned something about the CAT modeling, the storm modeling, the CAT modeling. Basically, the way that they look at it, and this is the way it works, I had no idea, was the winds increase for every 20 feet in elevation. So basically 2 stories, 3 stories. You go up 2 stories, 3 stories, there's increased wind. So if you're 100 down here, you've got 150, 135, only 20 feet above that. So the higher floors you go, the more probability of danger and the higher the wind velocity in a storm. I thought that that was interesting stuff. Now, here's another interesting thing I heard. We're talking about general liability now, general liability insurance. Florida is the 3rd biggest in general liability claims because it is a legal friendly state, meaning that they side with the claimant on average. I was kind of shocked to hear that, and they brought up a story that I thought really kind of encapsulated or supported that argument. Somebody won a $10 million claim. There was a party at a multifamily apartment complex, and someone had a party. And 2 of the guys decided they didn't like each other, and they whipped out their guns and shot each other. And one of the guys actually died. Well, the family of the gentleman who died sued the complex for not having enough security at this party that they had no idea was being thrown, and they won a $10 million lawsuit. So things like that get passed on to the insurance carriers. They in turn have to pass that on to us in payment. So what they're saying is rates and liability insurance are going to start to increase as well. And this is for commercial and residential. As we know, there's a lot of fraud out there that keeps happening. And when it got to homeowners insurance, he basically said in the state of Florida, good luck, because there are no carriers. All of the major carriers have really pulled out of the state of Florida. So what we're left with people that it's almost, I don't want to say junk bonds, but you're looking at lower level insurance carriers that are willing to come in here and are willing to give you some type of insurance. So in commercial, if your roof is over 10 years old, they're going to rate that as an actual cost value. In residential, if your roof is not less than 10 years old, you're only going to get about half your money back. So if you have a 20-year-old roof and you're insured, your insurance amount will be half of the value. So when you go to claim on that roof, God forbid something happens to your roof, if it's a total, you're only going to be able to collect half of the value on that. Metal roof, getting a metal roof does help you some. So what we're looking at here, like I said in the beginning, is everybody can expect a minimum of 20% of a 20% increase on your insurance or your homeowner's insurance. And most people are going to be looking at anywhere from 30 to 70%. If you're like me, I live in an older house, and it's really going to put we're going to have to make some major decisions here, because it's not a house that, in our opinion, and in most people's opinion, is worth replacing the roof. You're looking at $40,000, $50,000 to replace the roof on a structure that most likely is a development type site. So I think you're going to be seeing a shift in the market here with who's going to be going on and selling properties. I don't know. It's going to be interesting to see. Just wanted to give that knowledge to everybody. I hope this helps you out. If you have any questions, send them to me. I'd love to try to answer them for you. If I can't, I'll find somebody who will. And it's good talking to you guys. I'm sorry to give you the bad news, but sometimes you need things straight, no chaser. And I think that this is one of them. Take care, everybody. We'll talk to you soon.